Hey, good morning, everybody. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review weekend edition. Before we get started, I want to talk about three pieces of software that I find indispensable. I once had a friend for whom I have the utmost respect admonish me against shilling for the software companies. But I feel strongly that traders can and should benefit from highgrowthstock.com, freestockcharts.com, and marketsmith.com. So, shill I will. Let's start with MarketSmith. MarketSmith is a set of investment research tools for mastering the market, offering a set of extremely robust stock screeners, charts, and pattern recognition. More importantly, we use MarketSmith to generate our stock checklist, which we use to develop our universal watch list. Take a free trial of MarketSmith. Next, we have freestockcharts.com, which is a Warden Brothers product and has all the versatility of their TC2000 program on an a la carte basis. These are the charts we use in our daily video market review. I use the premium version, but they also offer an advertising-driven free version. And lastly, highgrowthstock.com, HGSI. HGSI is a remarkably versatile product that I use for analyzing and screening data. The Spectrum Analyzer is an HGSI product, and you can get a 1-month free trial of highgrowthstock.com, and you don't even need a credit card. And that's our commercial for this week. Okay, much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. So let's take a quick look at that. The C in CANSLIM stands for current quarterly earnings and sales, and reminds us that we should be looking for stocks that have a minimum of 25% year-over-year increases in quarterly earnings and or sales, and preferably accelerating earnings or sales. The A in CANSLIM stands for annual earnings and reminds us that we should be looking for stocks that have an average of at least 25% annual earnings growth over the past 3 to 5 years. The N in CANSLIM stands for new products, new management, or perhaps new market conditions. The N reminds us that we need something new and exciting to sustain longer-term profit. The S in CANSLIM stands for supply and demand, and reminds us that we want to favor stocks that have an average daily volume of at least 500,000 shares and trade at least 140% of their average daily volume on the day that they break out. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. We'll come back to that in a little bit. The I in CANSLIM stands for institutional sponsorship and reminds us that we want to find stocks that the institutional or professional fund managers are accumulating. And finally, the M in the CANSLIM acronym stands for market and reminds us that according to research, 75% of all stocks will follow the market. It's critical for our success that before we begin trading, we understand the current trend in the market. Okay, as we noted, the L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify the market leadership on a daily basis. So let's get started with that. Yesterday, of the 100 most powerful stocks in the most powerful industry groups, 13 came from semiconductor devices, 6 from communications equipment, 6 from application software, 5 from biotech, and rounding out the top 5, we had mass merchants, specialty pharmaceutical, exploration and production, and e-commerce discretionary, all with 5 stocks each in the 100 most powerful stocks in the most powerful industry groups. Let's take a look at the Nasdaq Composite. But before we do that, stocks capped a slow week Friday with more mixed behavior. The S&P 500 closed Friday with a small loss on light trading volume, while the Nasdaq wrapped up a week of consolidating around an all-time high with a small gain on slightly heavier trade than Thursday. This gives the Nasdaq a weak and unconvincing accumulation day, or a day of professional buying. The S&P continues to struggle to put resistance in the 2175 area behind it, while the Nasdaq is bracketed by minor support in the 5165 range and resistance around its prior all-time high in the 5232 area, a very tight trading range that it's been locked in for over a week. Both are testing all-time highs. Meanwhile, our market timing model on both the Nasdaq and the S&P 500 remain on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Investors.com is indicating a confirmed uptrend in the market with 4 distribution days on both the S&P and the Nasdaq. Distribution hasn't been particularly convincing, but 4 days is worth noting. Friday, declining issues bettered advancers by nearly 5 to 4. The new highs bettered new lows, but new highs have been slipping and new lows are creeping higher. Again, not a concern, but worth taking note of. The put-call ratio has been volatile recently and closed at 0.72 near recent lows. The volatility in the put-call ratio may be an indication of uncertainty in the market. Large capitalization stocks again bettered small yesterday. However, small caps continue to outperform on a 10-day moving average basis. The best market gains generally occur when small caps are outperforming. We remain on a buy signal on both the S&P and the Nasdaq, although both appear to be stalled and struggling. Both are locked into very tight trading ranges and testing all-time highs. The direction that we break out of those trading ranges should indicate the direction of the next immediate trend in the market. Traders should be fully invested, but as always, should be keeping their stops in place and current. Okay, Friday, the Nasdaq Composite was up 4.49 points, or 0.09%. We closed at 52.32, and we closed right at the top of our daily trading range. We also tested this area of resistance up here at the prior high, 52.32, and failed. Trading volume was just a shade higher than the prior day, giving us an accumulation day. An accumulation day is an indication of professional buying in the market, although yesterday's accumulation wasn't particularly convincing. For you followers of William O'Neill, we are in a confirmed uptrend in the market. We have been since June 30th. We have 4 distribution days on the Nasdaq in the past month, only one of which was particularly convincing. Still, 4 distribution days is worth taking note of. Our market timing model is on a buy signal. The Nasdaq Composite is bracketed by support down here in the 5165 area, and as noted, resistance at the prior high in the 5232 range. A break above that 5232 range would be significant. That would indicate that the next immediate trend in the market is probably going to be higher. Let's take a look at the S&P 500. Friday, the S&P was down 1.74 points, or 0.08%. We closed at 2184, closed in the upper half of our daily trading range, which is a little bit more bullish than bearish. Trading volume was below Thursday's levels. We are in a confirmed uptrend on the Nasdaq. On the S&P 500. We have 4 distribution days, none of which is particularly significant with the exception of this one right here. And so distribution, while it should be noted, isn't really a tremendous concern on the S&P. Our market timing model is on a buy signal, and right now the S&P is bracketed by support down here in the 2134 area, but more significantly we have resistance up here at 2175. We have been struggling for 3 weeks now with this trading range. Although we've broken above that area of resistance in the 2175 area, we haven't really decisively put it behind us. Okay, let's talk a little about swing trading. Swing trading is a faster and shorter term form of trading than can slim. In swing trading, we'll attempt to always trade in the direction of the short-term market as defined by the relationship between the Nasdaq Composite and its 5 and 10-day simple moving averages. Our swing timing model has 4 signals based on those relationships: buy long, trending positive, trending negative, and sell short. Swing trading utilizes a much shorter term setup than can slim. Those setups, both long and short, are short-term consolidations, flags, and bounces from significant moving averages. These setups can be as short as 5 days. We try to initiate all swing trades with stop limits, buy or sell, at the precise breakout point, but will generally only close positions at the end of the day. Our swing trading targets are typically going to be a 10% profit with a 3% initial stop loss. Swing trades typically last up to 10 days and require strict adherence to our rule sets. Let's start by taking another quick look at the Nasdaq Composite. Yesterday, or Friday, the Nasdaq closed above its 5-day simple moving average, which we show in pink, and its 10-day simple moving average, which we show in green. The 5-day is trading above the 10-day, which is our definition of a buy-long signal. A buy-long signal indicates that swing traders can be looking for long positions in this market. We currently hold 5 swing trade positions. ABMD, which we bought on the break above this short consolidation at 119.79. COHR, which we bought when it triggered above this consolidation at 107.50. TSE, which we bought on the break above this consolidation at 52.25. And our 2 most recent additions. On Friday we bought CYBR on this bounce from the 50-day moving average. We paid $52.25 for it. We have a stop in the 52.30 area and a target in the 59.24 range. And we bought BVN, which broke out of a 6-day consolidation around the 15.70 range. On Friday, we stopped out of YRD when it closed 6.92% below our trigger price, violating our 3% stop rule. We were stopped out of LGIH when it closed below its 5-day simple moving average. We took a small profit on LGIH. We were stopped out of BEAT when it closed below its 5-day simple moving average, took a small loss. And finally, CDE, we were stopped out of when it closed below its 5-day simple moving average, and we took a small loss on that. And wrapping up today's swing trades, we sold TWLO after holding it for just 2 days. TWLO hit our 10% profit target, and we took an 18.7 profit after all fees and expenses. For more information on swing trading, please contact me. My contact information's on the home page. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs Incorporated believes to be accurate. Ohannes & Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.